Hello, entrepreneurs, artists, and creators. This is Dave with Founder Dojo. Hey, today I'm going to tell you a story about how I built an e-commerce business from scratch with no money. That's right, no capital was used. Now, you may be asking yourself, well, how is this possible? Well, this is what I'm going to tell you. This is a story of how I did it. So, to give this a little bit of context, here we are in 2003. Venture capital in early stage investing has really been going through a shift this year. And it's not a shift that entrepreneurs are excited about. The shift is downward. Here's the North America venture dollar volume in the second quarter of 2023. And you can see year over year, this is down 50%. So there's a lot less startups getting funded. And this is across stages. So you can see the angel stage is this very little blue section, but even the early stage, which is typically, pre-seed, seed, and Series A, is way down. Later stage is way down. So this is not good. And then if you look at the same data coming from Crunchbase, by the way, in terms of deal volume, this is number of deals, number of transactions. You see a similar trend. The angel seed is not down as much, but it's still down. And so for entrepreneurs that are in the angel stage, pre-seed and seed, that's a little problematic. And then to get a little bit more specific, here's what the investment looks like in the second quarter. It's down pretty sharply. So it's not zero, okay? So the sky is not completely fallen, but it's definitely down. The startup market has cooled. If you've been trying to raise money for your startup, you've probably seen the impact of that. There's a lot of negativity in the market, and it's getting some people down. But from my perspective, I'm mostly a bootstrap guy. My first startup, I raised some venture money for, raised about $10 million in seed money. But my second startup, I bootstrapped in my house. It was self-funded completely. And I really enjoyed that model. I had success building startups without any capital, and so I kind of kept going and built 5 profitable startups in a row using that approach. So the question is, with funding drying up, is it possible to build a startup without funding? Now, what I mean here is funding in terms of investor funding, capital funding, external funding. Is it even possible? When I talk to some younger entrepreneurs these days, they seem to think it's impossible to build a startup, particularly technology startup, without money. So let me just ask the question, if I don't have capital, what do I have? Now, I asked myself this question when I was in Chicago. In Chicago at the time, this was 2003, 2004-ish, there were only 2 venture firms in Chicago. And it was kind of a stretch to call them venture firms. They weren't nearly as experienced as the firms in Silicon Valley, for example. And I went to both of them. They said no in about 17 seconds, and then that was it. And I was married at the time, and my spouse, former wife, really did not want to move to the West Coast. So I had kind of a personal issue there. And so I was thinking well, what do I have if I don't have capital? What do I have? Certainly there are, and I remember thinking this specifically, certainly there are entrepreneurs that have built businesses without venture capital. We know that's true. In fact, don't quote me on this, but I've read it's something like 15% of IPOs are actually had any kind of venture capital involved. So you've got 85% of these businesses that were built without investors. And what a lot of entrepreneurs do is they save up, they use their cash they have, they use credit cards. There's some high interest ways of getting a startup off the ground. So I knew that it was possible. But I really asked myself, what do I have if I don't have money? Well, it turns out I have creativity, right? I can come up with new ideas, creative ways to solve problems. I have ingenuity, right? As an engineer, as an entrepreneur, I have a lot of ingenuity I can bring to a situation. I have positivity, right? I could look at some of these funding stats and take away negative feelings, but I can also look at them and think about positive feelings. There's got to be a seed of equivalent benefit in here. It turns out that there is. I have belief. I have belief in myself. I have belief in the products I'm selling. I have belief that customers are going to understand the value of what we're doing. I have hustle, right? I can sell. I can get out, convince people, press the flesh, pound the pavement, knock on doors. I can hustle. I can work hard. I can outwork anybody, right? That's an asset. I can do this thing called ham and egging, which I learned from a case study in business school. And we're going to talk a little bit about that because it turns out ham and egging is a pretty important element to this. And then, of course, I can generate sales, right? We talked about that a second ago, but just kind of restating it. That hustle, that sales, I can get money from customers. So here was the situation. I had this email business that I bootstrapped in my house. We were running revenue. We got to profitability relatively quickly because I had no cost. I was working on it alone as a solo founder. And we got to profitability early with like a very small amount of revenue, and then just kept growing based on internal cash flows. And so this was several years later. We had a several $1 million business here. And one of our big clients was Smart Bargains. They were with us from the beginning. And if you don't know Smart Bargains at the time, they were like a small overstock.com or a little bit like Amazon. And we lost them as a customer. They canceled. And it's a long story, and it was heartbreaking. And I had just hired a bunch of people, so I was freaking out. I was like, they're 30% of our revenue, right? Like, what am I going to do? How can we replace Smart Bargains? How can we replace a third of our revenue? And we have to do it now. We have to do it virtually overnight. So what is the fastest way to replace this revenue? Well, I took a hard look at the Smart Bargains website, and it was a generic e-commerce website. Now, at the time, there was no such thing as e-commerce software. There was no Shopify. There was no package that you could sign up for. Amazon had built an e-commerce system, by hand. And anyone who had an e-commerce system where you could check out and then run a credit card using typically a gateway like authorize.net. There was no Stripe. You had to do this programmatically, and you had to do it using PHP or some kind of programming language, basically building the code from scratch. So I looked at their site and I saw what they had done. And I also noticed that a lot of times they were out of stock. They were selling items that didn't exist. Okay. So I looked at that and I said, how hard could that be? Right? Like, why don't we create our own e-commerce site? We have engineers. And I talked to one of our engineers and said, yeah, I built an e-commerce checkout process before using PHP. And I'm like, great, let's do it, right? And then I also realized, like, we don't have capital for inventory, right? Typically in an e-commerce or retail business, you have to buy products on a wholesale basis and then sell them at the retail price to the end consumer. Well, we didn't have any money for that. So I was trying to figure out how I could overcome that obstacle, and I realized the cool thing about e-commerce is you don't actually need to have the product in hand. You can sell an image. And that's what Smart Bargains would do a lot of times. They would sell products that they didn't have. So I had kind of beginnings of this theory of how we could get an e-commerce business off the ground. So I got excited about it. The pieces started to come together. I said, let's run a test. Now, one of the things you have to be careful about is if you're selling products that don't exist, every order is going to be a back order. Right? So this was before the days of Amazon Prime. This was the days where people were just getting used to putting their credit card on the internet and into a website. And the supply chain was typically like a direct mail order supply chain. It's going to take a couple days, maybe 2 weeks at the most. But one of the credit card rules that you have when you run credit cards is if you have a back order situation, so in other words, customer orders something and it's not available, you have to notify them within 48 hours and let them know that it's back order and give them an opportunity to cancel if they want to. So this was a big question. Of course, we wanted to comply with the rules, but we didn't know how many would cancel. We know we could sell the images, so we lined up a supplier. And I'll tell you a little bit of what we wanted to do. Well, I'll just tell you right now, we wanted to sell sunglasses. This was springtime. I personally was looking for a pair of sunglasses. I wanted a pair of Oakleys, which was kind of like the hot sports brand at the time. But the Oakleys were ridiculous. They're like $200-300. I wanted like a really high quality pair of Oakleys for like $50. That's what I personally was looking for. And so I was like, hey, let's just try that as our first e-commerce category. We found a wholesaler, someone who, imports these sunglasses from China on the slow boat, and we could get these sunglasses at a wholesale basis. Looked like we could make about 50% margin. But the question was, how many customers are going to cancel? If we generate orders and all the customers cancel, though this isn't going to work. What we need to have happen here is that customers order, they check out, we ding their credit card, we get the cash from their credit card transaction a couple days later into our bank account. And then we want to use the cash that we got, which is essentially a prepaid order, to go buy the inventory from the distributor and then ship the product directly to the customer as quickly as possible. But if all of the customers cancel, of course that won't work, because when they cancel, we're going to have to give them all their money back, and then we won't have the cash to go buy the product. Make sense? So if we have a 50% gross margin, meaning the cost of the sunglasses are half of what we're selling them for, we could tolerate up to half of the people canceling, right? That would be our break even. If more than half cancel, we're out of luck. We won't have the cash to buy the products. If less than 50 cancel, then we would have some cash, depending on how much lower it was below 50. Okay, so everybody has this set up. This is how we're doing it. We're selling products that don't exist. We're selling images, and we're going to use the cash from the sales to fulfill the products. So we created a page of sunglasses. We had 30 or so sunglasses on the page. We set up our email system, which was a business that I owned, so it was relatively easy to do that. And we ran an experiment. We blasted out a bunch of emails, mostly to see what would happen to the cancels. So here's with the hypothesis. Our hypothesis was that 20% of customers would cancel. As soon as they would check out, we would alert them through email and through a pop-up, and if they wanted to cancel, they could just cancel right there. Our assumption was that 20% of these customers would cancel once they were made aware that this was going to be a back order situation. It might take a week or two to get the items. Our assumptions around the unit economics was that our average order size would be about $50. It's about the price of one pair of sunglasses. Our cost of goods would be $25. We knew that from the pricing, wholesale pricing quote that we got from the distributor. We would have a $10 cancel cost. If 20% of the customers canceled, that means we're going to lose 20% of that $50. And so that works out to $10. And then our gross margin would be our revenue, which was $50, minus the cost of the sunglasses is $25, minus 10, which is the cost of the canceled orders, the money we had to give back, and we would net $15. So our gross margin percentage would be 30%. Okay? So this was our assumption. So we said, look, if we get 20% cancel, we're in business. We're in business. We can do this. This can work. We can launch this business with no money. Here are the actual results. We sent over 50,000 emails. We had 2,133 unique clicks, which was a click-through rate about 4.2%. Of those that clicked through, 32 purchased, meaning we had a conversion rate of 1.5. That means they put in their shipping information and their credit card and they checked out. Because we own the email system, we had a very low cost to send emails. In this case, it was only 0.2 cents, so virtually zero. But we actually owed some data royalty on that, so it wasn't literally zero. And so our cost per customer was $3.17. And look at this, we had only one back order cancel. Only one customer of the 32 looked at the message and said, you know what, I do want to cancel. Every other customer, 31 other customers said, it's all right, I can wait a couple weeks to get these items. So what that meant was, holy crap, we now have a gross margin instead of 30% of 47% because our cancel cost was only $1.55. So because we were able to sell these images without having the product and only 3% canceled, we could take the cash from those checkouts to go buy the inventory. And it worked. And this is how I built an e-commerce business with no money. But there's one other thing. This gets better, and I don't have a slide for this. But because we ran this test, not only did we know that we could sell 32 pairs of sunglasses, we knew the SKU distribution because we had a sample of 32 orders. And so we knew which items were more popular than others. And we could go to the wholesaler order form and adjust the SKUs that we were buying so that we could eliminate the SKUs that nobody wanted and we could buy more volume of the SKUs that people that did want it. And luckily, we had a very large email operation at this time. We had hundreds of millions of email addresses that we were managing for other publishers. So we were able to scale this e-commerce business just using our email channel and just using this method of selling products that don't really exist. I mean, they exist, but we didn't have them in hand. Okay? And so you can see how I was able to use creativity, ingenuity, entrepreneurial-like thinking to bootstrap an e-commerce business with no money. So here are the lessons. These are important lessons to take away. You don't need finished products to generate orders and to generate revenue and to get commitment from customers. You don't need finished products. Remember that. This is the key to the solution validation method that I'm teaching here. You do not need finished products. Okay? Virtual goods can be sold on concept. In fact, I would argue almost any product can be sold on concept. As long as the customer understands what you're selling and what the product is and how it works and how much it costs, you can sell on concept without having a finished product. This, of course, applies to e-commerce. You can sell the images. It, of course, applies to software. You don't have to have the final software done. You just need to have a screenshot and to be able to explain to the customer what problem this software solves and how it works and how much it costs. People get it. They have an imagination. They know what software is. If you show them a screen, they're going to understand it if the screen is clear and makes sense. Marketplaces, right? Airbnb, e-commerce shops, any kind of marketplace you can imagine can be sold on concept. We even did this with social clubs, like get together and join Adventure Club. We're going to go kayaking down in South Florida, sign up in advance, and get access to all these activities. We were able to do that without having the activity set up. And many, many, many more. So many times, entrepreneurs, particularly new entrepreneurs, think they need to build a product. They need to build an MVP and get the product done and get it perfect and get it out there. And what happens is often they'll go launch that product and find out that nobody wants it. They don't get any traction. And now they've wasted all the time and money that it took to build a product that nobody wants. Instead of doing that, the essence of the problem validation process here is to turn that on its head. Assume that the product's already done and go sell it. And what you'll find out is if you can sell it and if you can't sell it and who the early adopters are and who the customers are that are saying yes and how much they're willing to pay. Like all the details of that transaction will be known in advance. And if you miss the target, you can just change the screenshot or change the images. Instead of doing sunglasses, you can do handbags, right? And you can change all those things at virtually no cost until you get validation from the customers and get them to buy these things in advance. So think creatively about how you can get started with no money. Okay, last point. Entrepreneurs a lot of times don't understand all the sources of capital. So I want to list just 3 types of capital, sources of money, that I want you to think about that you may not have heard before. And this is in order of importance. Number 1, customers, right? How do you create a business with no money? You get money from customers. It turns out customers will buy your product if they think it'll solve their problem and they think it's a reasonable price. And when they give you money for the product, they don't expect a board seat and they don't expect any equity. They're just happy to have your product if it's a good product. Number 1, customers. Number 2, vendors. In the sunglass example, something you may not have noticed, we had this relationship with the distributor that was ultimately going to sell us the sunglasses. And they were willing to work with us by giving us all the images, for example. When I talked to them, I said, hey, before we place our order, can you help us get our website set up? Do you have high resolution images of all of these sunglasses? And they said, yes, of course. I said, can you just send those to us? And they said, yeah, absolutely. They're images. They don't cost anything to send. And if they're helping us get our process going, they're happy to send them. So they were able to give us materials, in this case, the high-res images, to get the orders. The other form of vendor support you can get is payment terms. What if we worked out a deal, and we did this as we kept going in this e-commerce business? What if this distributor wanted your business so badly they'd be able to give you net 90-day terms? In other words, we'll send you the sunglasses on your order, and we don't expect you to pay us for 90 days. This is possible, right? To get flexible terms from vendors. That would give you 90 days to go sell those sunglasses and to get all the money so that you can pay that invoice 3 months later. That's another source of capital that a lot of people don't think about. Getting better terms from your vendors, developing these partnerships. And a lot of vendors will work with you, particularly because they want to have a new customer, right? They want you to be successful so that you can buy more of their products. And then, of course, the third is investors. So I think a lot of entrepreneurs flip this. They think, I need capital, I need investors. Investors should be number one. I think in the best situation, investors are no higher than number three. So think about customers, vendors, and investors in that order. Okay, so hopefully that was a helpful story. That's one of two stories I'm going to share with you guys on how I created a startup with no capital. And so we're going to go through the second one, and then we're going to go through some other examples of how the solution validation process works. Okay, hopefully that was helpful. See you next time. If you're interested in learning how to do this, of course, I teach a course on how to do it called the Founder Dojo Basic Training Class. All you have to do is go to www.founderdojo.com and check it out. And you can sign up for a free training video, get to know me a little bit more, get to know the kind of content that I produce and how I help founders. And if you're interested in that, you can sign up and we can start a relationship. So thanks so much and hope to talk to you soon.